I'm Esther Hertzfeld, Executive Editor of Hotel Management, and I'm here with JLL America President Dan Peek. Welcome, Dan.
Hey, how are you, Esther? Good to see you.
Great. Given the recent economic volatility in the market these days, what do you anticipate in terms of occupancy and revenue for the rest of 2025?
You know, it's really, since the pandemic, it's really been a rate-driven recovery. So we've gotten past prior peak revenue, but we've sort of lagged from an occupancy perspective. We still see that. There are definitely markets that have more than recovered from an occupancy standpoint. There's also very limited new supply. So I would say overall, I think we'll see small incremental growth in terms of demand and occupancy, but we'll continue to see pretty strong pricing.
Oh, great. So the demand for conversions has been very strong lately. Do you see that kind of leveling out or declining in the next few years? And I guess, what are your future thoughts on that?
I think conversions are here to stay for the foreseeable future. You know, the cost of construction is very high, and the ability for the brands and for operators to grow units via traditional construction are somewhat limited. So brands looking for conversion opportunities is a key component. So you've seen that in the M&A market, you've seen that in asset by asset conversion. We also have seen a little bit of use conversion. So office to hotel, we've seen it in other product types, office as an example to multi-housing, hotel to housing, et cetera. So, you know, the sort of the green reuse of buildings as a baseline for conversions is there, but also from a brand perspective. So it's a more readily available source of growth from a brand perspective until construction comes back in a more meaningful way. And that construction being limited, combination of factors: one, inherent cost of construction; two, higher interest rates than we've been used to for the past 10, 12 years.
Yeah, absolutely. So what are the emerging markets to watch, in your expert opinion, and what would you say is behind their growth?
Well, I think we saw a lot of different changes from an emerging market perspective. One, during the pandemic, we sort of had this sort of release of folks and this sort of relative freedom. So we saw these rising tide markets, like for instance in the Southeast, right? All of a sudden everybody wanted to go to Austin or Nashville or Savannah or Charleston. And those markets have continued to have sort of very interesting dynamics. And then we saw places like, you know, there's always new ones, right? But, you know, you hear a lot of people talk about places like Knoxville and Boise and places around the country. So I think there's always this sort of continued evolution of markets that are interesting. But, you know, at the end of the day, the old line markets are great. You're starting to see part of the recovery today is more corporate and more group. And that brings us back to the traditional markets. We're here in New York. The business is great. Things are doing really well in New York. But you go to New York, Boston, Chicago, DC, et cetera, those markets are coming back into their traditional peak demand periods. And so while the emerging markets are doing well, the traditional markets are coming back as well.
It's great to hear. So besides extended stay, what are the hot brands right now? What makes them so popular?
You know, extended stay has been a big component. Certainly on the economy side is one of the few areas where we've seen meaningful new construction that straddles housing. And so that's a unique dynamic there. But I would say much more lifestyle oriented. Sort of what are the brands, both from select service and full service, that are more appealing to the next generation traveler. So when we think about some of the M&A activity and some of the new developments that have been happening, they've been much more, you know, so you think about select service, what do we see? You know, you'll see ACs, you'll see Moxies, you'll see Mottos, products of those sorts. You see the recent Citizen M announcement, right? Things along those lines. So I would say lifestyle is certainly a place people are looking where they sort of can capture a different traveler with a different perspective going forward. So I would say in addition to extended stay, lifestyle will be a hot corner for new activity.
We're definitely seeing that. So what gives you the most optimism about the industry moving forward for the rest of the year?
You know, I would say for the rest of the year and generally, I think we've seen a shift since the pandemic. Again, we all kind of look through a lot of things through that prism, that people are investing more and more of their discretionary dollars in experiences versus in goods. And travel is a key component of experiences. And so as we think about going forward, that's where we'll see activity, and that will really, you know, yield demand. So when we're here in New York City this week, we're here in Manhattan, when you walk out the door of the Marriott Marquis and you're in Times Square, you can feel that energy. You feel it all over the country. And I think that desire for experiences, we've seen record numbers of Americans travel to Europe, right, as an example. I think that's going to continue. So travel being an experience, despite some of the noise we hear about different changes and dynamics in international travel, and certainly there's headwinds with inflation and costs, et cetera. I'd say overall travel is on a very strong uptick, and performance will be supported by the fact that it's so difficult to develop new hotels today. So the performance of existing assets will only be buoyed by that fact.
Well, that's great. Great information you've shared. I appreciate it very much.
Happy to do it. Great to be
Thank
with
you.
you. Have a
Thank
great
you.
conference.